Hello, my name is Aarti Patel. Today I am going to present presentation on under the subject of corporate accounting, and the topic is accounting for income tax, and the company chosen is AGL Energy Limited, which is registered in Australia Security Exchange. Introduction. The company chosen for this assignment is AGL Energy Limited, which is registered in Security Exchange of Australia, known as ASX. AGL Energy Limited is public organization that is involved in the both development and retailing of electricity and gas, which is used for both purposes like commercial as well as residential. The organization develops energy by power station which utilize several energy sources such as wind power, thermal power, natural gas, solar energy, coal system, hydroelectricity, gas storage and sources. Explanation of concept. First, accounting profit. It is the total income of firm which is calculated as per GAAP principle. This consists of specific business expenses including operating expenditure, interest, depreciation and taxes. In taxable profit, taxable is gain or losses payable on income tax. The composition of tax profits varies according to the tax authority. So it is depend on rule of tax authority where the entity is located or does it business. Temporary difference. It is the cash amount of liability assets in balance sheet of the item it is based on tax, and the taxable temporary difference is provisional difference that would be yield amount of taxable in future when defining taxable loss or profit. In taxable temporary difference, it is the cash amount of liability assets balance sheet of the item, and the balance temporary tax difference is temporary difference, and the taxable amount arises when the taxable income or loss defined in the future. Another concept which is deductible temporary difference. It can be deducted in a temporary difference that will rise to deductible amount when a future taxable amount or loss determine a future. The provisional difference in case amount of the liability or assessed in balance sheet of the item is tax based. Deferred tax assets. These are provided in balance sheet that result from overpayment or prepayment of taxes. When there are difference between tax and accounting rules of the professional tax losses occurs, deferred tax assets may appear. Deferred tax liability. It is a tax asset that is tax payable or payable but not yet paid in present period. The deferred time is due to the time difference with the tax collected and tax payable. Recognition criteria of AGL Energy Limited, which is include deferred tax assets recognition, deferred tax liability recognition, tax expenses, tax rates, deferred tax assets and liability, current tax assets, income tax expenditure, and income tax paid. So we are starting with deferred tax assets recognition. In deferred tax assets, which is deductible temporary differences, unused tax credit and unused losses of taxes are recognized, it is possible to generate taxable income to offset temporary differences that may be deducted if the deferred tax asset is not derived. In deferred tax liability recognition, the general principle of IAS 12 is to recognize deferred liability of tax for every tax income differences. These are the three expectations of the defined tax rate. Obligations arising by the recognition of goodwill preliminary. Liabilities which is arise by initial recognition of liability or assessed other than the combination of business do not impact accounting or tax profit in connection with the transaction. In tax expenses, AGL Limited has tax expenses of $374 million in 2019, whereas $662 million tax expense in 2018. The another recognition criteria is tax rate time. Yes, AGL Energy Limited has tax expense similar tax rate time of the company, which is almost 30%, because this is the corporate rate which is decided by government and only government can change it. The companies are not allowed to change it. In deferred tax assessed and liability, AGL Energy Limited has deferred tax assessed of $261 million in 2019, where it has $280 million in 2018. The company has deferred tax liability of 97 in 2019. Current tax assessed or income tax payable. The current tax assessed of AGL Energy Limited are $89 million in 2019, where it was $147 million in 2018. And income tax payable of the company is $27 million, where it was $81 million in 2018. Income tax expenditure and income tax paid. And company an income tax expense which is defined in the income statement of the firm $374 million and $662 million in 2018. The company tax paid, which is shown in the cash flow statement of the company firm, which is $263 million in 2019 and $159 million in 2018. So these are the recognition criteria of AGL Limited, which is registered in Australian Security Exchange. There are some temporary difference and permanent difference in AGL Limited Energy. In temporary difference, deferred tax liability or assets resulting by temporary difference may arise only when they are subsequently first paid to the extent that the expected balance sheet item may create future financial benefit for the company. In permanent differences, because they are not described, permanent differences do not create a deferred tax sales of liability item that may give rise to constant differences, including item of profit or expenditure that are not permitted by tax law and tax credit of expenses related to direct reduction of certain taxes. In treatment of taxes, when I am doing my presentation as well as assignment, one interesting thing I found when dealing with the taxes of AGL Energy Limited is that domestic companies have to pay Australian income tax with their total income. Generally, foreign companies are required to pay an Australian taxes of the income only one income by Australian company. So these are the temporary difference and permanent difference of the AGL Energy Limited. In conclusion, I can clearly state that the assignment has defined several concepts of taxable profit, accounting profit, taxable temporary differences, deferred tax assets, temporary differences, deferred tax temporary differences, deferred tax liability, and it has also analyzed the criteria of recognition for the deferred tax liability and deferred tax asset. The presentation has explained the tax expenses of the company which is collected from the annual reports of the company, including 2019 report and 2018 annual report. And it has identified the deferred tax assessed or liability which is defined in the annual report of the company in 2018 and 2019. The presentation has determined the difference within the income tax expenditure and payable of the income, explain the concept of temporary differences and permanent differences, and the significance of taxes. These all are references which I have used in my assignment for my making my presentation as well as my assignment. Thank you.